special economic zones for the manufacturing sector to goal over 46 billion naira in 2018. Central Bank of Nigeria (CBN) mop up 2.2 trillion naira through open market operations in January of 2018. On the capital market, the NSE market capitalization and all-share index ended on negative territory on Friday. Global stocks routed yields rise as U.S. inflation threat spooks the market. This is Business Express coming to you from our Abuja studios. I am Amina Nujaim, your guide for today. The federal government is planning to spend a total of 46.39 billion this year on construction of special economic zones for manufacturing sector in all the 6 geopolitical zones in the country. The amount is part of 2018 proposed budget sent to a joint session of the National Assembly by President Muhammadu Buhari last year. The 2018 budget has a total allocation of 8.61 trillion, made up of 3.49 trillion recurrent expenditure, 2.43 trillion capital vote, while debt servicing and statutory transfers, among others, will go up the sum of 2.01 and 456 billion naira based on budget documents. The amount would cover the completion and upgrade of Calabar and Kano free trade zones. Now, the federal government on Friday said it had commenced the automatic exchange of tax information, particularly on overseas assets held by Nigerians, with a view to checking tax defaults. The Minister of Finance, Mrs. Kemi Adeosun, said this in Abuja during the presentation of the progress report on tax law reform. Leah Katung Babatunde has this report.
At inception, one of the major concerns of the present administration was boosting revenue, which solely depended on oil that crashed in the global market. Reviewing existing tax laws was imperative to improve tax ratio to GDP, which stood at a paltry 6%. The gathering here availed the National Policy Implementation Committee the opportunity to submit its first-year report to the minister. Outcomes include 2 executive orders and 5 amendment bills. Finance Minister Kemi Adeosun is emphatic that obligations to the Nigerian Treasury must be met irrespective of the personalities involved. Hence, the quick wins coming from Nigeria being a signatory to the Automatic Exchange of Information Treaty.
We've already started to receive significant volumes of data from a number of countries automatically. They're giving us information on bank accounts, on property, and on trusts held by Nigerian citizens within their jurisdiction. What we've said here, and this is what underpinned the Voluntary Asset and Information Disclosure Scheme, was that we knew this was coming, and we advised those who were holding assets outside under trusts or holding assets abroad who had not paid the right taxes prior to the transfer of those assets to come under VADES. VADES is still available and open until the 31st of March.
The approved National Tax Policy (NTP), as well as the Ease of Doing Business Plan, are documents considered by the committee with a recommendation to align all tax reforms with the document. In Abuja, I'm Leah Katung Babatunde.
And to look at the bank charges and the economy, we are joined by a former Deputy Governor, Central Bank of Nigeria, Obadiah Milafia. Thank you for joining us on Business Express.
Thank you very much, Amina. It's a pleasure to be here.
Now, we are looking at charges by banks. Give me a picture of deposit money banks and charges on products and services.
Well, first of all, let me just say, quite honestly, that I'm very friendly to banks. I used to be one of them. It's a noble and very honorable profession. And we are told that among the few people you should trust are your bankers, your imam or your priest, your accountant, your lawyer, your doctor. These are professions that, you know, if you don't trust the people that, you know, are looking after you, then it's a challenge. Unfortunately, of recent, the issue of extortionate charges by banks have become quite worrisome. I mean, October last year, the Central Bank of Nigeria Customer Department said that something like 50 billion naira were recovered from bankers, from banks within 3 years, averaging about 16.7 billion on an annual basis. This is the overcharges. These are the ones that are known and recovered. Probably many others are not recovered, and not even people don't even bother to go and find out.
Right, we have lots of complaints from customers who say that they are being charged ridiculous charges on services and products, and the CBN has come into this equation. How would you say they have been effective in checking these excesses?
Well, I welcome the initiative to set up a whole customer care department with a full director in charge, and she's doing a good job. But I'm afraid they are really overwhelmed. We are told that they have something like 204,000 cases being submitted every year. I mean, think about it. Even if you are handling 10 cases per day, how many are you going to be able to do in a full year? So they are overwhelmed and overburdened with so many cases. And I think that sometimes that makes it difficult for them to give very detailed attention. But I welcome the initiative, and it has served some very good purpose. I know people who have had genuine cases who have gone there and justice has been done to them. They've been able to recover their funds, but we are still far off from where we ought to be.
Okay, Obadiah Melafia, before we continue this conversation, we will take a background report and continue this discussion. Now, the Central Bank of Nigeria, CBN, and the Bankers Committee have continued to take steps to review its guide on charges on various products and services by deposit money banks and other financial institutions and mobile payment operators offer to their customers. The CBN guide came into conclusion after extensive consultation with market stakeholders over some charges and disparity between operators and customers in April of 2017, and yet charges remain. The order of the day in deposit money banks. Busa Abakar has this background report.
Records indicates that Subcommittee on Ethics and Professionalism set up by the Central Bank of Nigeria and other regulators have for the past 15 years received a total of 1,749 petitions and resolved 1,597 cases of excess bank charges by deposit money banks in the country. Consumer Protection Department of the Central Bank of Nigeria has also resolved 4,289 of the 6,737 cases brought to it between 2010 and 2014. Despite these efforts, excess bank charges still persist in the country.
Definitely they are increasing. Sometimes I do complain, but I have not gotten any response, because there is a day I was sleeping, I wake up and saw some deduction. No explanation for that.
Last month I experienced that. It's very obvious that I went to my bank and said, why are they charging me? And they promised that they will revise it. And I was very, very furious. I was not happy. And I told them, I said, please, if you people are not going to do this, I'm going to close this account, and I will not do any business again with you people.
Sometimes you could be charged, but because you think it is just like 1 naira that has been reduced from your money, it's too minimum, it's too meager for you to raise your voice. And you don't know that by the time they charge about 1 million naira, 1 naira over 1 million people, that is a huge amount of money. And really, it is high time that the government should come in to know how banks are really so charging or review charges unnecessarily.
The cumulative amount of refund banks made to their customers arising from settled cases in 2001 to 2015 is said to be over 50 billion naira, with a lot of cases unreported.
Many thanks, Musa. Dr. Obadiah, let's now continue with the discussions. The National Assembly has deliberated in one of their sessions where it said that 2.6 billion naira has been recovered. To what extent would you say such a large amount would affect the Nigerian economy?
Well, 2 billion is a drop in the ocean if you look at it by virtue of an economy that is almost $500+ billion per annum. So, but the issue is that, you know, these small amounts, when replicated over so many, it amounts to quite a lot of money. And the greatest problem is that it actually undermines the moral integrity of the system. You know, bankers work on trust. People put their deposits on trust. The whole financial system runs on trust. And when we break that trust through, you know, excessive charges on customers that put their money to you on trust, then that weakens the moral fabric of the whole financial system. So we've got to be very careful in that. Many factors led to this, you know, the BVN implementation, a lot of money left the banks. So, you know, the bankers are now left with how to, you know, literally scrounge for money from all corners that they could get. The other one is poor financial technology, you know, that should have, if you computerize the whole system, it is easier to be more accurate. And of course, the staff often need training. The tellers, the bank tellers that are the, you know, the front desk need a lot of training in order to know how to charge people adequately. And lack of transparency. Some of us, when we were students in London, our popular bank was for students with Barclays Bank. If you wanted to borrow a small student loan, they put a brochure with all the charges. You knew precisely how much you were borrowing, how much it would cost you, how much they would charge you. Everything was upfront. In Nigeria, you hardly ever find that. So we need people to be more upfront and more transparent. And I would also say we need financial training for ordinary Nigerians so that when they're putting their money, they know how much they will get as charges. And if they're borrowing, they know how much. And to be able to read the little print. Often, I mean, you see, the conditions and terms are written in the little prints, you know, whether it is variable rate of interest or fixed rate of interest and the rest of it. Most of the time, customers don't know this.
It's been a pleasure talking to you on the program today. Let's do it again.
Thank you.
Now, moving on. Lagos State got its highest allocation of 201 billion naira. Gombe, Ebonyi got the lowest of 57 billion naira each. A new report on the federal allocation for 2017 indicates that the federal government, 36 states and the 774 local government councils in Nigeria shared a total sum of 5.9 trillion naira from the federation account in 2017 in spite of economic recession witnessed during the period. While the federal government and its agencies received a total sum of 2.5 trillion naira, the other tiers of government shared 3.3 trillion. The total allocation of 3.3 trillion to states and their local government councils is 700 billion naira above the 2.6 trillion they received in the previous year of 2016. In its annual detailed investigative report with a table of figures, the Economic Confidential disclosed that among the states received, Lagos was ranked first as the highest recipient of gross allocation with a total of 201 billion in the 12 months of 2017. Now, liquidity at the Nigerian money market remained tight, with the Central Bank of Nigeria (CBN) mop-up of 2.185 trillion from the system through open market operations, OMO auctions, while it held all through months of January of 2018. This is 41.7% higher than 1.542 trillion it mopped up through OMO operations in December of 2017. In January, it held OMO auctions almost every day, taking out 344.7 billion and 553.17 billion in the first and second week of the month. It also mopped up 369.41 billion in the third week, 477.92 billion in the fourth week, and 400.21 billion in the last 3 days of the month. Traders said the constant OMO auctions of the CBN ensured a tight liquidity, with money market rates, particularly oversight rates, expanding last week. The overnight lending rate rose by 683 basis points to 12.17% against the previous week's close of 5.33%, as outflows via OMO and foreign exchange sales valued at 491.06 billion and 210 million US dollars. Let's now join Muplang Dakok for a look at figures from the Nigerian Stock Exchange and major markets around the globe.
0.268 billion shares worth 28.123 billion naira in 35,761 deals were traded last week by investors on the Nigerian Stock Exchange. The NSE All-Share Index depreciated by 1.98% to close at 44,639.99, while market capitalization depreciated by 2.09% to close at 16.019 million naira. The financial services industry, measured by volume, led the activity chart with 2.482 billion shares valued at 17.056 billion naira in 23,039 deals. It was followed by the conglomerates industry, which traded 375.113 million shares valued at 1.047 billion naira. The third place was occupied by the consumer goods industry with a turnover of 262.198 million shares worth 6.843 billion naira in 5,921 deals. Trading in the top three equities, FCMB, Transnational Corporation of Nigeria and Skybank, accounted for 1.181 billion shares worth 2.830 billion naira in 5,219 deals. ICO Insurance PLC, Unity Bank PLC, and Wema Bank PLC led top 10 gainers in the week, while Lasaco Assurance PLC, Associated Bus Company PLC, and Law Union and Rock led the losers.
Muplang Dakok there, many thanks. We are now joined from our Lagos studios to look at developments in the capital market by Chief Relationship Officer and Dealer, Foresight Securities and Investment Limited, Charles Fakraga. Nice to have you join us again on the program. Right, the Nigerian Stock Exchange, the All-Share Index and market capitalization seems to be looking up. Can you explain that for us?
Yes, of course. The market is dynamic. And we have seen the beginning of the year, we have seen the positive outlook of the economy. We have seen the foreign reserve increasing. We have seen the GDP also increasing. And of course, the relatively cheapness of the Nigerian equity compared to other climes has made more and more foreign investors to come to the markets. And that has increased the confidence of the local investors, and we are seeing more and more investors coming to the market, thereby increasing the transactions that are being done. And of course, when all that is happening, of course, the indicators, the All-Share Index will continue to look up and up and up.
Cherry news for investors there. Now, looking at the sectorial indices, the conglomerates, the services and the financial sector seems to be competing against each other. Can we also look into that development?
Of course, you will look at the equities in that space. You will find out that most of them are leaders in the industry. I wouldn't want to mention specific examples, but over time, we have noted that the financial service industry, the conglomerate, and of course the service industry, as you have mentioned, the companies there are leaders in the industry in terms of their pedigree, in terms of the product they sell, in terms of the results they've been turning out, their numbers over a period of time. And of course, investors who want to be part of a company that is doing very well. So that's why we are seeing those sectors will continue to dominate. However, other sectors are also doing quite well, but those sectors will continue to dominate based on investors' perception of these sectors.
Now, still good news for investors there, I guess. Now, looking at infractions within the capital market, to what extent would you say regulators are working towards checking these infractions?
Well, I must say, in the capital markets, our most word that we use most of the time is your word is your bond. You must be a fit and proper person for you to operate in the Nigerian capital market. Yes, infractions will always be there, they will come, but there are rules and regulations that guide the market. And for every operator or issuer in the market, you know that by the time you go contrary to those rules and regulations, there are penalties. So the penalties are there, and the regulators are doing all that is possible to ensure that operators, issuers in the market operate by the rules. And of course, we on our own part as operators, through our umbrella body, CIS, Action, we're encouraging our members to ensure that integrity is their watchword. They do what is according to the rules and regulations. Because as professionals, you are expected to be of high ethical standard. So for you to operate in the capital market, you must be a fit and proper person. So I assure you, any member or any operator in the capital market who goes contrary to rules and regulations of the market, of course, will be shown the way out, as we have seen in recent times.
All right, on a final note, what would be your projections for the potential investor this week?
Well, for potential investors for this week, we are just entering. I will advise that they get close to their stockbroker, plan your trade with your broker, trade your plan, assess your risks, know your risk assessment, know your risk appetite, so that you can invest in companies that will meet your investment philosophy and objective. If you are a retiree, you look for companies that are paying consistent dividends. Their price increase might not be so much, but consistent dividend, and you are sure of predicting the income you are going to get. So for speculators, I will advise them, do their work very well, do your research very well, and get close to your broker, because at the end of the day, it is your broker that will execute for you.
All right, go to your broker for advice. Charles Fakraga of Foresight Securities and Investment, many thanks for joining us on the program today.
Thank you very much.
Now, moving on. Musa Abubakar will now give us insight into developments in Africa and the global markets.
Africa equity markets closed positive on Friday, with Kenya Nairobi SE gained 0.15% to close at 3,758.18. Ghana and Tunisia stocks gained 0.20% and 0.89%, while South Africa's JSE lost 1.04% to close at 51,908.17. Namibia overall index lost 0.88%. United States stocks ended the week in red, with the Dow Jones Industrial Average losing 2.54% to close at 25,520.96. S&P lost 2.12%, and Nasdaq Composite closed at 7,240.95, losing 1.96%. European stocks also ended the week on a negative note. FTSE dropped by 0.63% to close at 7,443.43. DAX lost 1.68%.
And that's it on Business Express today. Thank you for being a part of it. Let's keep a date on Wednesday. Thanks for watching, and I am Amina Nujeng.